So I'm very happy to introduce our next panel discussion. These are two friends of Build. They're also two very prolific content producers and analysts. We have Parker Lewis, author of the Gradually Then Suddenly series, and Sam Callahan, host of Swan Signal and lead analyst at Swan Bitcoin. Come on up, guys.
You gonna switch these two?
All right. Can everyone hear me well? All right. So my name is Sam Callahan. I am the host of Swan Signal Live and the lead analyst at Swan Bitcoin, like David mentioned. And I'm joined with Parker Lewis, who is a prolific author as well as the head of business development at Zappright. And Parker, you've been writing about Bitcoin for a long time. And you actually come from the traditional finance world. And I would love it just if we start to go into your origin story, because I think that can lead us into describing the problem. And that's what we're going to do up here today. It's very difficult to understand a solution when we don't understand the problem. And what you'll find today is that the problem is that the money is broken. And so, Parker, maybe describe your origins and how you came to Bitcoin, because I think that'll lead us off really well.
Yeah, thanks, Sam. And it's great to be here. I want to thank the Build team for organizing this. It's a great event, and I really appreciate the opportunity to come and speak to you guys and help hopefully unlock some things about Bitcoin. So when I talk about how I came to Bitcoin and some perspective that I give to people is that I came from the traditional financial world. I was not somebody that immediately jumped into Bitcoin head first. I was skeptical for a long time. I like to think about it as I was skeptical but not dismissive, and that coinciding with my kind of going down the Bitcoin rabbit hole, I was separately and really independently of Bitcoin, trying to understand. I was working for a hedge fund at the time, and I was trying to understand what would happen. This was around 2016, 2017. What would happen when the Fed unwound post-financial crisis QE? So I started my career on Wall Street at Deutsche Bank in New York, and I was there for the financial crisis, but I had no real understanding of what was happening around me other than the fact that it was chaos and a crisis. And about 10 years later, when I was working at a hedge fund, I was trying to understand when they take that money out of the system, what would happen. In order to do that, I had to go back and understand from my own perspective why they had to put the money in the first place. And so entirely independent of Bitcoin, I went down this rabbit hole of, well, why did the Fed have to print $3.6 trillion in the period from 2008 to 2014 in order to have a view as to what would happen when they unwound that. And that the principal conclusion that I came to then was that they were never going to be able to take the money out of the system or unwind what they had done in the post-financial crisis QE, and that it wasn't just that they weren't going to be able to undo it, it was that they were always going to have to print more money. And that, and we can talk about a little bit why this is the case, but that the reason fundamentally why is because of just how indebted the system is or how much leverage there is in the system that necessitates that they're going to have to print more money. And it's actually the printing of more money and the introduction of money that causes more debt to be created, which then necessitates more money to be created. I realized that the printing of money was a problem. I realized that independent of Bitcoin, it helped me start to formulate why Bitcoin actually solves a problem. But I was sitting there looking at the world in 2016 saying, they're never going to be able to take the money out of the system. They're going to break the financial system again. They're going to have to print more money. And they're always going to have to do that. And that it's a problem because it ultimately ends in the currency failing. And I don't say that to instill fear in people or to talk about hyperinflation in a way that is dystopian. But there's this fundamental reality that human time is scarce, and people can't trade their scarce time for something that the Federal Reserve creates for nothing. And so in 2016, I came to that conclusion that they were always going to have to print more money. It's what happened in 2020. It's the same scenario that we're in here today. They're going to have to print more money than they ever had before. And at that same period, I started to become interested in Bitcoin. And I started to understand why Bitcoin had fundamental value, but part of that was anchored to this understanding of a world where they were always going to have to print more money. And when I tell people, and if there's one thing that I say about Bitcoin that you take away from it, it is that all fundamental value in Bitcoin starts and stops from the fact that there's a fixed supply of 21 million, and that no more than 21 million Bitcoin will ever be created. And what it ultimately represents is a form of money that can't be printed. And so I was doing these two paths of research. They're always going to have to print money. That's a problem. And here's this thing, Bitcoin, and it represents to have a fixed supply. And the most important thing is that it happens credibly without the need for trust. And that I started to understand that Bitcoin was the solution to the printing of money. And that on the one side it was inevitable, and as soon as I started to develop my own independent understanding as to how Bitcoin enforces the fixed supply, why it's relevant, and part of that side, and then I'll kind of go to the next question, but part of that side has very little to do with Bitcoin, and it has everything to do with money. And it's this idea that economic systems converge on one form of money. And oftentimes, and I think everybody consistently here today will talk about Bitcoin, it is important to say, and this isn't to be disrespectful of other people's potential perspectives on crypto, but when I say Bitcoin, I only mean Bitcoin. And I think when everyone here talks today on Bitcoin, they will do the same. I don't think that crypto is a fundamental value. I think Bitcoin specifically solves the problem of printing money. And that's also rooted in this idea that economic systems converge on one form of money. It's not a coincidence that we all only use one form of money. And Bitcoin solved that problem by delivering a form of money that can't be printed. And it was really conceived with the foresight that central banks print money all over the world, and that's a problem for everybody.
Yeah, so you kind of brought up the global financial crisis, and that's where a lot of this kind of culminated into, and they really just papered over the problems, right? They used quantitative easing, which is the bond buying programs. The Fed just took these bonds, put it on its balance sheet, exploded the debt. But like you said they tried to unwind it, and they couldn't. Ben Bernanke at the time, he said, hey, we're going to shrink the balance sheet eventually. It's going to be fine. They tried to do that. Then Janet Yellen came in after him and said, it's going to be like paint drying on the wall when we try to unwind the balance sheet. Still, we've just seen the Fed's balance sheet continue to increase over and over again throughout the years. So why is that? Why do you think they can't reduce the balance sheet? You said they're going to have to keep printing money. It's inevitable. Why can't they bring it back down? I think that's an important point to touch on.
Yeah, so when I was doing my research in 2016, the best way that I was able to distill it for myself was that system-wide, going back to 2007, there was $53 trillion of dollar-denominated debt in the U.S. And that's not just the federal government debt, that's all debt in the system, but it's also very vanilla debt. So student loans, auto loans, commercial real estate loans, mortgages, corporate debt, financial and non-financial, state, local, federal, so it includes that. But it doesn't include derivatives, it doesn't include unfunded pension liabilities, and it's a number that the Federal Reserve prints themselves. So it's not something that you have to go, kind of piece together. It's their conception of how much debt exists in the United States. So at that time, there was $53 trillion of dollar-denominated debt. There were only $900 billion in total. And there were only $350 billion that existed in the financial system, in the banking system, so which is really the relevant number. So there was $53 trillion of debt, but only $350 billion in the banking system. So the banking system was leveraged 150 to 1. And so when that system started to collapse in 2008, that's what necessitated the Fed coming in and ultimately printing $3.6 trillion. What they were ultimately doing was providing that $53 trillion of debt with more base money, more liquidity to allow the debt to be sustained. And so I describe it as we had a debt problem it was unsustainable. The only way in the Fed's world to sustain it is to print more money. Well, from that world to 2019, so kind of fast forward 10 years, that 53 trillion of debt had grown to about 76 trillion. And that's really by design. So they put more, we start in a world that has too much debt. They put more dollars in to satisfy it. The introduction of those dollars induce, by design, the creation of more debt. Each time they try to take the dollars out, they walk into a buzzsaw. That's essentially what happened in 2019. The Fed started to take the dollars out between 2017 to 2019. It's perfectly forecastable. You've created this system that causes the massive expansion of debt by the introduction of dollars, and then as soon as you try to take them out, you walk into a buzzsaw. That, and it is one critical point that when they printed all the money in 2020, people oftentimes associate that with COVID, and it had nothing to do with COVID. It had to do with the fact that the system remained massively leveraged because the introduction of dollars actually induces the credit system to expand. It causes the problem to get larger, and that the financial system actually broke again in September of 2019 before COVID was ever an inkling and before the government shutdown happened. And when the financial markets broke in September of 2019, the Fed came in with $75 billion in a single day. And to give you guys context, for those of you who aren't familiar, at the height of post-financial crisis QE in 2012 to 2014, the Fed was creating $85 billion a month. So they break the financial markets in September of 2019, and in one day they come and put $75 billion back in. And before the lockdowns in March of 2020, they had already created 500 to 600 billion new dollars that they put in the system. Then they do the lockdown, and they print $3 trillion from March of 2020 to May of 2020, and 5 trillion total. And that then has induced a credit expansion just from 2019 to today of over 20 trillion. So where we stand today in the financial system is 96 trillion of debt to only $8 trillion. And I say 8 trillion, but when you realize that they've created 10 times the amount of money in the last 10 years plus, and it's more than just printing money leads to higher prices at the grocery store. It's the printing of money that ultimately causes currencies to fail, because economic distortions build up in the system, fragility builds up in the system, and so what they're trying to do now is take dollars out of the system by raising interest rates, and what it's going to result in is the exact same, and there's no way out. That's another conclusion that I came. It's like the system is broken. It's beyond repair. It has to be replaced by a better system, a more stable system, and that is ultimately what Bitcoin represents.
Yeah. Well, in response to the pandemic, and like you said, even before the pandemic, when the financial system started to crack, they printed trillions. And over the last decade, though, what we haven't seen is CPI inflation rise. And so now the Fed is responding, jacking up interest rates at one of the fastest rates in its history to try to combat CPI inflation. Why won't they be successful in bringing it down? Like you mentioned the debt, kind of explain how debt begets more debt, and that them raising interest rates will actually worsen this problem.
Yeah, so I think at the highest level idea is that raising interest rates does nothing to, and taking the money out of the system does nothing to make food and energy more abundant, or anything more abundant. And that food and energy are the two most important goods in the system. It doesn't, someone's out drilling oil and they're relying on, credit to drill, or there's a farmer that's relying on credit and getting squeezed, that ultimately the thing that brings down costs over time is greater abundance, not destroying somebody's livelihood and causing them to no longer demand goods. And so it's ultimately rooted in this fact of we're living in a system with too much debt and too few dollars. And if you turn on a financial news or look at a mainstream economist talk about inflation, they will try to explain it away every other possible scenario than the massive elephant in the room that's like, but you created 10x the amount of money, and isn't that what's causing this? And so ultimately, they're always going to have to print more money. The inflation that we're experiencing is actually just catching up, and it ultimately results in the ultimate inflation event, which is hyperinflation. And if you go back to history, it's like it rhymes, repeats, that what they tried to do was increase interest rates in 2007, crisis. Inserted a bunch more money from 2009 to 14. 2017 to 2019, tried to take the money out, raise interest rates, crisis. Always have to print more money, and it's the exact scenario that we're in today. It's a vicious cycle, and the only way to get out of it is to stop playing by the rules of that system and to opt out into a system that is more stable, that has greater transparency, better rules, can't be manipulated, can't be corrupted.
Yeah, and when they raise interest rates, it raises the interest expense on the debt too, which just begets more debt, which just kind of puts pressure on the yields more, which kind of leads to this spiral, right?
Yeah, and that is another side of it, which is if you start to think about this from 2007, 52 trillion of debt, 2019, 76 trillion in debt, today, 96 trillion. So this one, it's accelerating. Debt begets more debt. Just it's the empirical reality of where we live. And then you start to explain, well, why is that the case? But on this side of why they can't ever reverse is, as you think about that debt system growing from 53 trillion to 76 trillion to 96 trillion, the system cannot sustain a higher maintenance burden, which is the interest rate. So if you have 96 trillion of debt and then you all of a sudden say, yep, everyone suddenly is going to pay 5% more a year, it's like, well, where does the money come from? There's not enough money to go around. The system is so leveraged. So that's ultimately what causes everyone to figure out all at once that the system is far more than just $1 short. It's orders of magnitude short of dollars. If you thought about yourself, because it's oftentimes you think about a micro level. Imagine you were massively in debt and you were struggling to get by as it was, and then the cost of your mortgage increased by 5%. Well, that's a microcosm of what's happening to the entire system.
Level. And so you kind of see this with the fiscal spending, right? They're about to run almost $2 trillion fiscal deficit right now, with inflation still above that mysterious 2% target that the Fed loves to talk about. But they're still spending. And so if we can just say, okay, we're going to continue spending, these debt problems is going to lead to more money printing, what they'll kind of sacrifice is the dollar in the form of higher inflation, and your purchasing power will be eroded over time. Now, can we just talk about the implications of savers in that scenario and talk about how inflation, maybe the second order effects of it, how when the money is broken, how does that affect kind of more broadly the economy and how we facilitate trade and those kind of things?
Yeah, so I think that, an establishment economist or some mainstream academic would say, like, we just print a little bit more money and everything costs a little bit more and everyone figures it out. And that's not really the way that the world works. Economic systems are far more complex than let's just increase the money by 10% and prices can go up by 10%. Prices do not change ratably, and it ultimately is the equivalent of a wrecking ball where everyone's trying to figure out, it's like this might go up 20%, that only goes up 5%. The relative value of everything changes. It's like an earthquake, basically, to the economic system. But maybe what it does more functionally is it starts from a world of imbalance, and it allows those imbalances to be sustained and then grow. And that's what ultimately causes the social fabric to break, and it's what causes the currency to ultimately fail. So the first order effect is goods at the grocery store cost more. But the second order effects is that the money's ability to actually coordinate trade and to coordinate highly complex systems degrades to the point where it can no longer function. Every instance of hyperinflation has, one way or another, happened as a function of money printing, but it's not just that they create more money and suddenly everything evaporates in the economy, it's that the complex supply chains start to break down. One example that I use is GM used to manufacture cars in Venezuela. And in 2013, 2014, when inflation via the function of money printing in Venezuela started to run rampant, GM had to write down all of their Venezuelan bolivars. Well, what happened? They could no longer import the parts from their suppliers to manufacture cars, and then there were no longer GM cars being manufactured in Venezuela. That's a microcosm of what happens. Another microcosm is we had a housing bubble in 2007. Housing prices were unsustainable because of the manipulation of interest rates prior to that period. As housing prices start to come down, the Fed literally started buying mortgages to prop up housing prices, which makes it that much more unaffordable for people entering the economy. So it starts from a world of imbalance. It allows imbalances to be sustained. But then once those imbalances are sustained, it allows imbalances to grow, which causes this massive wealth gap, these massive inequalities. And it's like unequal economic outcomes are perfectly natural and desired, actually. That, like, unequal outcomes are a part of economic balance. The economic imbalances that are created as a function of printing money are, I would say, inequities. They're basically starting from these world of imbalances and distorting them by like these conscious decisions rather than natural economic forces. And so ultimately, though, where it ends is it starts with prices going up. That causes imbalances to be sustained and grow. Economic imbalances being sustained and growing ultimately leads to economic fracture. And as the 50 instances of fiat currencies hyperinflating in the past naturally causes goods to stop showing up and things becoming more expensive to the point that trade can't happen. So the only solution to that problem is a better form of money. Like, you can't go into that system and fix it. And it's for this reason that there really is no inherent monetary property of the dollar. That when they create $5 trillion, it costs zero. And when they're going to have to print more money than they've ever had to before in the years to come, it costs zero to do that. So when you think about yourself getting up and going to work to produce whatever you produce, 8 hours a day, 40 hours a week, 2,000 hours a year, you can't trade your time for something that they can create out of thin air. You have to trade your time for something that best matches the scarcity of your time, and that is where Bitcoin comes in, where I talk about all value in Bitcoin deriving from the fact that there will only ever be 21 million. It is a form of money for the first time that's ever existed that is finitely scarce. So you're essentially matching your finitely scarce time, converting it into a finitely scarce form of money that nobody can print. And because it's not a coincidence that we all use one form of money to trade, and the reason why that is because trade is an intersubjective problem. We actually have to agree on what the standard of value is, that if there is a form of money that is finitely scarce, that is why people, when they're looking at this problem, whether they consciously understand the problem of the dollar or they're just feeling it at the grocery store or feeling it in the social fabric breaking, that they're looking around for a solution, and the people that find the signal in Bitcoin find it for that reason, that it's the solution to the problem of printing money, and that it's the best solution because it best matches the scarcity of their time, because it's the only form of money that is finitely scarce.
So the Bitcoin actually holds the value over long periods of time, whereas fiat currencies continue to get devalued over time despite you using the same work and time to earn that money. So why not earn money that saves over time or maintains its value over time? But yeah, if I could just add a little color to what you said, though, it's like when there is inflation, if there's a lot of business owners in here, if you tried to have a partnership or create a contract with some supplier, you probably found it more difficult over the last couple of years when you saw the prices of commodities spike and fall, trying to plan out your futures, trying to make investments. That's the kind of imbalances and difficulties that inflation creates. Same thing with the money and like real estate, for example. People are using real estate as an investment more than shelter today because the money's broken, doesn't save over time, doesn't hold its value over time. So they're turning to other assets as basically money when it's not supposed to function that way. That creates large imbalances where young people can't afford homes anymore because the value's been jacked up, because people are using it for money because the money is broken.
Yeah.
Now, you say that Bitcoin is not a hedge against inflation. It's actually the solution to inflation. So maybe elaborate a little bit on why you should think that framework is what people should think about.
Yeah, so I gave a presentation last week in Dallas where I talked about this idea where there's a knowledge spectrum in Bitcoin, and on either side of the knowledge spectrum, you either have very limited knowledge and people with very limited knowledge of Bitcoin that start to buy it and speculate in it. They're typically trading it to make more dollars. And with limited knowledge, time is not their friend. If they don't have a fundamental understanding as to why Bitcoin would store value over time, why they should really want to own it, that the volatility will destroy them. That if you do not have an understanding of Bitcoin, you will panic and sell it at the wrong time because you can't explain it, or you bought it at the wrong time, and if you sold Bitcoin at the wrong time, it wouldn't have allowed you to hold purchasing power over time. In that world with limited knowledge, as to be able to understand the world around you and having limited knowledge of Bitcoin, it can't act as a hedge. But then as you start to understand the fundamental signal, as you move down the knowledge spectrum, as you start to develop a appreciation for why Bitcoin's fixed supply is important, the problem that it solves, starting to develop in your own formulation as to how it might be possible that this form of money is finitely scarce, how it's enforced, that no one controls it, no company, no CEO, no government, and that it is viable as money. In that world, volatility is actually your friend. If it goes down, you accumulate more, you store more value in it. If it goes up, yes, you can sell it and buy a house and something that you want, but you're not just trying to get more dollars. You're actually accumulating Bitcoin because you've started to explain to yourself rationally as to how and why Bitcoin is replacing the dollar as money. And in that world, it's also not a hedge to inflation. It's far more than that. It's the solution to money. And my view of Bitcoin is like, if Bitcoin credibly enforces its fixed supply of 21 million, it is the solution to the printing of money. It goes from this volatile store of value to the form of money that is perfectly stable, and that the volatility is a function of very few people owning it and pricing it for the first time. But once everybody owns Bitcoin, it will be perfectly stable. And what that means is we're going to go from a nascent store of value that very few people own today, but it's growing, to a world where everybody has Bitcoin. And in the world where everyone has Bitcoin, it's the unit of account, it's the currency that's actually being used to trade, to price things like gas at the gas station, food at the grocery store, your health care, your homes. And it's just a functioning day-to-day currency, and we don't think about it in the dollar price because the price of goods will be priced in Bitcoin. So it's like, if you do not understand Bitcoin, it cannot functionally be a hedge. If you start to develop the fundamental signal, it's far more than a hedge. Michael Saylor, who's a guy who runs a company called MicroStrategy, who's started to invest his public company balance sheet in Bitcoin, had a comment that really simplifies this comment, which is like, if you understand Bitcoin, there's no way that you only own 1% or something around that concept, which is, it's a lot more. And, once there is also something very cathartic. Once you start to save in a form of money that works in your favor, that holds your purchasing power over time, that it's so much more than financial. Once the value that you've created in the past can be held into the future rather than degraded. That's what you mentioned about, like, when you think about, there's something very, very broken beyond just financially, where it's like, if you got up and delivered time to other human beings, and then somebody comes behind you and starts printing money, and the value that you delivered in the past can no longer purchase a commensurate amount of value that was actually delivered. Like, it's not just numbers on a screen that's broken in that world. There's actually like a economic and moral incentive that becomes broken, and that's something else that Bitcoin fixes. And so that other side of Bitcoin not being a hedge and the solution to inflation, there's an economic reality that once you get to the other side of that knowledge spectrum and you start saving in Bitcoin, like, I don't work because I need to make money. I work because I want to deliver value. And there is something cathartic about it where you're like, oh, this giant weight that I knew was on my shoulder but didn't know what the cause gets lifted because my money is actually working for me as it should, and it's aligned, and the value I've created in the past is actually stored in the future. I can start to have a longer time preference, or a lower time preference to think about the future more.
Yeah, when you have a money that can't be manipulated, when you know that it can't be inflated all of a sudden, not many people could have predicted the trillions of dollars that were flooded into the system by the central bankers in 2020.
But they're perfectly predictable.
Right, but with Bitcoin, we know how much Bitcoin is today, we know how much there's going to be in 10 years, 100 years, and 1,000 years. And that kind of stability allows us to kind of save over time and preserve our purchasing power. So I hope this conversation kind of helped frame what some of the problems are with the current system. The next talk with Keith and I are going to get into like what Bitcoin is and 101. But thank you so much, Parker, for sharing your insights on this and teaching us why the money is broken.
Yeah, absolutely. And
Huge round of applause for Parker Lewis
yeah,
and
I'll
Sam
be around,
Callahan.
so come find me if you have questions. I'm happy to answer questions. So
Yeah.
thanks,
Thanks
Sam.
everybody.